Let us start with what you already know because the bull case for SpaceX is genuinely real and I am not going to pretend otherwise. SpaceX is the most dominant launch company on the planet. In 2025, they accounted for roughly half of every orbital launch on Earth. Not half of American launches. Half of every launch on the entire planet. That is not market leadership. That is market ownership. Starlink, their satellite internet business, crossed 10 million subscribers in early 2026. Revenue was around $11.4 billion in 2025, up roughly 50% from the year before. The margins are extraordinary. Over 60% adjusted EBITDA on the Starlink business alone. That is software company economics wrapped inside a rocket company. Once the satellites are up, every new subscriber is nearly pure margin. The IPO priced at $135 a share. The valuation is $1.75 trillion. They are raising around $75 billion, more than double the previous record for the largest IPO in history, which was Saudi Aramco at $29 billion. And they reserved 30% of the offering for retail investors, which is 3 times the usual retail allocation. So the door is more open than normal. That part is true. This is a genuinely extraordinary company doing genuinely extraordinary things. If you came here expecting me to tell you it is a fraud or a bubble, I am going to disappoint you. The company is real. The business is real. The dominance is real. What is also real is what comes next. Here is the part that does not make it into the excitement reel. At $1.75 trillion, you are paying over 100 times revenue. Not earnings. Revenue. The entire consolidated company, SpaceX plus the AI business they folded in, actually posted a net loss of nearly $5 billion last year under standard accounting. The combined entity is sitting on an accumulated deficit of over $40 billion and recently took on a $20 billion bridge loan. Before you close this video, I want to be very clear. None of that makes SpaceX a bad company. Amazon lost money for years. Tesla lost money for years. Both of them went on to make early investors extraordinary returns. Losing money while reinvesting aggressively into a genuinely dominant business is not the same as a company in trouble. But here is the sentence that changes the math entirely. You are not buying SpaceX at the price Amazon was when it was losing money. You are buying SpaceX at a price that already assumes it becomes one of the most valuable companies in the history of human civilization. At $1.75 trillion, SpaceX is already priced as though it has won. The question is not whether SpaceX is a great company. It almost certainly is. The question is whether it is a great stock at this price. And those are 2 completely different questions that the excitement in your feed is blurring together on purpose. Morningstar, one of the most respected independent research firms, ran their own valuation and pegged SpaceX's fair value at around $780 billion. Less than half the IPO price. Their analysts said, as directly as analysts ever say anything, that investors will likely get better entry points after the IPO settles. That is not a fringe opinion. That is a credentialed research shop doing the math and arriving at a number that is half of what the market is charging on day one. Here is the sentence I want you to keep from this video. A great company and a great investment are not the same thing. The price you pay determines which one you get. Let us get specific. Because vague warnings about valuations do not help anyone. Here are the 4 concrete things that are not making it into the SpaceX hype content you are seeing everywhere right now. Thing 1. The lockup expiration. When SpaceX goes public, the insiders, the employees, the early investors, the executives, cannot sell their shares immediately. They are locked up. SpaceX's lockup structure releases in stages, with the full unlock happening around 180 days after the IPO. That lands somewhere around December of 2026. Here is why this matters to you. There are thousands of people inside SpaceX sitting on life-changing amounts of paper wealth right now. Some of them have been waiting years to access it. The moment the lockup expires, a portion of them will sell. Not all of them. Not even most of them. But enough to create real selling pressure on the stock at a moment when the initial hype has already faded. History is consistent on this pattern. IPO lockup expirations frequently cause stock prices to dip. Sometimes significantly. The patient investor who waits for the lockup expiration before buying often gets a meaningfully better entry point than the excited investor who bought on day one. Nobody selling you SpaceX excitement is telling you to wait until December. But the data says December is worth looking at. Thing 2. The voting structure. When you buy SPCX, you are buying economics. You are buying a share of the profits and the growth. You are not buying any meaningful say in how the company is run. Elon Musk controls approximately 85% of the voting power through a special class of shares, even though he owns around 40% of the actual equity. SpaceX is going public as what is called a controlled company, which means it can skip certain governance requirements that protect shareholders at normal public companies. In practical terms, this means that whatever Musk decides to do with SpaceX, including decisions that might prioritize the Mars mission over shareholder returns, including compensation structures that would get laughed out of a boardroom at any other company, including strategic pivots that Wall Street disagrees with entirely, you have essentially no recourse. You are a passenger. He is the pilot. Whether that is a feature or a bug depends entirely on how much you trust the pilot. But it is a fact that is being mentioned very quietly in the fine print and not at all in the headline. Thing 3. The competition timeline. SpaceX's moat is real, but it is not permanent. Amazon's Project Kuiper is funded, in production, and launching satellites. They have deep pockets, a distribution network, and a very specific plan to compete with Starlink. Blue Origin is launching. European and Asian competitors are investing heavily. China has stated national ambitions in this exact space. None of them are close right now. SpaceX's lead is enormous. But you are not buying SpaceX's position today. You are buying it at a price that assumes that position holds and expands for decades. And the timeline on meaningful competition is much shorter than a decade. The $1.75 trillion valuation does not leave much room for a world where Starlink faces real competition and pricing pressure 5 years from now. Thing 4. The AI company they quietly folded in. Part of what drove SpaceX's valuation from $800 billion to $1.75 trillion in the last year was a decision to fold in Musk's AI company in an all-stock deal. That AI company brought enormous ambition, enormous potential, and also enormous cash burn. The $5 billion net loss and the $40 billion accumulated deficit are significantly influenced by that merger. You are buying a rocket company, a satellite internet company, and an AI startup all wrapped together in one ticker at a combined valuation of $1.75 trillion. The Starlink business alone can arguably justify a significant valuation. The AI piece is a bet on top of a bet. And that distinction is not making it into the 30-second excitement reels. So let us go back to the parking garage. Priya closed her laptop and walked into work because she had decided something that most retail investors never get around to deciding before they buy. She had decided what kind of investor she was going to be before she bought anything. She was not going to be the investor who buys on day one because the energy feels right. She had been that investor twice before and she knew what it cost her. She was going to be the investor who lets the excitement buyers overpay first, watches the first earnings report in the fall, notes the lockup expiration in December, and only then asks whether the price makes sense for what the company has actually demonstrated. She set a calendar reminder for December 15th. She wrote herself a note with the specific criteria that would make her buy: revenue growth rate, Starlink subscriber trajectory, how much selling pressure the lockup expiration actually created, and most importantly, a price that represented a meaningful discount to even the most optimistic independent valuation. She did not know whether she would end up buying. She was not bearish on SpaceX. She was just not going to let the most hyped IPO in history make her decision for her. Ryan meanwhile bought $3,000 of SPCX on the open market at the day one price because he had been watching the countdown for 6 weeks, and the moment it started trading he felt something he can only describe as now or never. Now or never is not an investment strategy. It is a feeling. And feelings are what casinos are designed to produce. If you want exposure to SpaceX, here is what your actual options look like with the honest version of each one. Route 1. Buy at IPO price through your brokerage. Available through Schwab, Fidelity, Robinhood, SoFi, and E-Trade if you submit an indication of interest before the window closes. The catch is that demand is enormous and supply is limited even with a 30% retail allocation. You might get your full request filled. You might get a fraction of it. You might get nothing. And you are buying at the maximum hype price on the most excited day. Route 2. Buy on the open market after it starts trading. No gatekeeping, no minimum, no allocation lottery. You just buy it like any other stock. The catch is you are paying whatever price the most excited buyers in the world are willing to pay on day one. History says that price is frequently not the best entry point. The patient version of this route is waiting for the first earnings report, for the lockup expiration, for the hype to cool, and then evaluating at a calmer price. Route 3. Get exposure through Alphabet. Google's parent company owns roughly 5 to 6% of SpaceX, worth somewhere around $100 billion at the IPO valuation. If you buy Alphabet stock, you get SpaceX exposure wrapped inside one of the most profitable companies in human history, with no premium, full liquidity, and normal shareholder rights. It is the least exciting way to get SpaceX in your portfolio, and possibly the most rational one. Route 4. One of the funds. The ARK Venture Fund, the Barron Partners Fund, and others have significant SpaceX positions. The catch is fees and structure. Some of these are interval funds with limited liquidity windows and management fees that quietly eat your returns. And the Destiny Tech 100 Fund, which trades at a premium of sometimes triple its actual net asset value, meaning you are paying $3 to own $1 of assets because someone drew a rocket on it. Avoid that one. Here is what a calm, rational, non-FOMO version of this decision actually looks like. You do not have to do anything in the next 4 days. The single loudest voice in your head right now is the one saying that if you do not buy on day one, you will miss it forever. That voice is wrong, and it has cost retail investors more money than any other single thought in the history of markets. If you want exposure, size it like the high-risk bet it genuinely is. No more than 1 to 2% of your portfolio in any single IPO. No more than 5% of your portfolio in all speculative bets combined. If SPCX triples, 1 to 2% tripling is a great year. If it craters, 1 to 2% craters, and your life does not change. That asymmetry, small bet, large potential upside, survivable downside, is the entire game. If you cannot stand the idea of trying to time it, dollar cost average. A small amount now, a small amount after the first earnings report in the fall, a small amount around the December lockup expiration. You will never nail the exact bottom doing this, but you will never get destroyed buying everything at the exact top either. And if you look at all of this and decide that a $1.75 trillion valuation for a company losing money on a GAAP basis is not the right price for your risk tolerance, that is not missing out. That is discipline. And discipline is the only thing that separates the investors who build wealth from the ones who donate it to people who showed up earlier and calmer than they did. So let us go back to the parking garage one more time. Ryan bought. The stock popped on day one the way hyped mega IPOs almost always pop. He felt vindicated for about 6 weeks. Then the lockup expiration approached. Then the first earnings report came in with numbers that were strong but not strong enough to justify the day one price to a market that had already cooled slightly from peak excitement. Then December happened, and a wave of insider selling created exactly the kind of dip that patient investors had been watching for. Ryan did not buy more at the dip. He was too shaken by watching his position go underwater to think clearly about whether the dip was an opportunity or a warning. He held. He will probably be fine in the long run because SpaceX is a real company with a real business. But the next few years are going to be more uncomfortable than he expected when his thumb hit the buy button that Wednesday morning. Priya bought in December after the lockup, at a price roughly 22% below what Ryan paid on day one. Same company, same shares, same long-term upside, different price, different patience. The difference between them was never about SpaceX. It was about who made the decision and who let the decision get made for them. Here is the one thing I want you to do before you touch this stock. Write down the specific criteria that would make you buy. Not a feeling. Not a price target someone on social media gave you. Your own criteria based on what you actually read about the business. Revenue growth rate you need to see. Subscriber trajectory on Starlink. A price that represents a real discount to an independent valuation. A position size you can watch go down 40% without panic selling. If you cannot write those 4 things down before you buy, then you are not investing. You are gambling. And gambling is fine if you know that is what you are doing. It is only expensive when you think you are investing. If this gave you a clearer picture of what you are actually buying when you buy SPCX, if it slowed you down even a little before a decision that deserves to be made slowly, hit subscribe because that is exactly what this channel exists to do every single week. Drop a comment and tell me, are you buying SpaceX on day one, waiting for the lockup, going the alphabet route, or watching from the couch with a bowl of cereal? I read every single one. No wrong answers. And I will see you in the next one. It is a Wednesday morning and Ryan is sitting in his car in a parking garage, engine off, staring at his brokerage app. SpaceX just went public. The ticker is live. The price is moving. His thumb is hovering over the buy button and he has exactly the feeling he has been chasing for 3 years of investing. The feeling that this time, he is not going to miss it. He is about to miss it in a completely different way than he thinks. 2 floors up in the same building, his colleague Priya closed her laptop 10 minutes ago. She looked at the same IPO. She read something most retail investors never bother to find. And she made a decision that Ryan will not understand until about 18 months from now when the numbers finally tell the story clearly. By the end of this video you are going to know exactly what Priya read, why it changed her decision, and what the people selling you SpaceX excitement are very carefully not mentioning in the same breath as the hype. This is not a video telling you not to buy SpaceX. It is a video making sure that if you do buy it, you are buying it with your eyes open instead of your emotions open. My name is Nick, and I spend an unreasonable amount of time pulling apart the gap between what financial media tells you and what the actual math says underneath it. Make sure you are subscribed because today we are going to do something most finance channels will not do during an IPO this exciting. We are going to read the fine print out loud. Quick disclaimer before we start. I am not your financial advisor. Nothing in this video is personalized investment advice, and I have no position in SpaceX. These are the mechanics, the math, and the honest trade-offs. What you do with them is entirely your call. Here is the idea I want you to hold for the next 20 minutes. Think of a major IPO like a brand new casino opening night. The place is beautiful. The lights are incredible. The energy in the room is unlike anything you have ever felt. And the house, the institution, the bank, the early investor, has already counted the money 3 times before you walk through the door. You are not being cheated. The games are real. Some people walk out winners. But the casino does not open on your schedule. It opens on theirs. The drinks are free because free drinks make you bet faster. The excitement is real because excited people make worse decisions than calm ones. And the exit, the quiet, patient, boring exit, is always on the other side of the room from where everyone else is standing. Priya found the exit before she decided whether to play. Ryan never looked for it.